What's good, everyone? Nova here, and I need you to sit with this number for a second. $2 trillion. That's what SpaceX was worth within the first hour of trading yesterday. Not in some future projection, not in a pitch deck, but right now, today, as actual shares trading on the NASDAQ under the ticker SPCX. Elon Musk just took the most secretive, most mythologized company on the planet and handed a piece of it to anyone with a brokerage account. And the headlines are calling it historic, record-breaking, the biggest IPO the world has ever seen. But here's what nobody's telling you on the surface-level news. Underneath all that euphoria, there's a story that's a lot more complicated, a lot more uncomfortable, and honestly, a lot more important for you to understand before you get caught up in the hype. So stick with me, because by the end of this video, you're going to understand exactly what just happened, why it happened now, who actually benefits from it, and what the hard truth is that the celebration headlines are conveniently leaving out. Let's start with the basics, because the speed of this thing is honestly staggering. SpaceX filed confidentially with the SEC back on April 1st of this year. Then on May 20th, they went public with their S-1 filing, which is the document that finally cracked open the books on a company that has spent over 2 decades operating like a black box. The roadshow kicked off June 4th, pricing happened the night of June 11th, and by Friday, June 12th, shares were trading. That is an absurdly fast timeline for a company of this size. For context, companies usually spend months, sometimes over a year, in the roadshow and investor education phase. SpaceX did it in about 6 weeks from public filing to trading. And the pricing itself tells you everything about the appetite here. They priced at $135 a share, offering over 555 million shares, raising $75 billion. That's not a typo. $75 billion. To put that in perspective, the previous record holder was Saudi Aramco back in 2019, and that raised about $29 billion. SpaceX didn't just break the record, it nearly tripled it. And then the stock opened. It opened at $150 a share, and within the first hour of trading, it soared into the 160s, pushing the company's valuation past $2 trillion. $2 trillion. That puts SpaceX in a club with maybe 4 or 5 companies on the entire planet. We're talking Apple, Microsoft, NVIDIA territory. A rocket company that for most of its history operated at a loss, that blew up rockets on live television, that was once laughed at by the entire aerospace establishment, is now sitting at a valuation that rivals the most dominant tech companies in human history. And retail investors went absolutely wild for this. There was a dedicated event for around 1,500 retail investors the day before pricing, and the order books were reportedly stacked with regular, everyday people trying to get a piece of this. This wasn't just institutions and hedge funds quietly accumulating shares. This was a cultural moment. People who've never bought a single stock in their life were opening brokerage accounts just to say they own a piece of SpaceX. Now, here's where it gets interesting, because this isn't just a SpaceX story anymore. Somewhere along the way, SpaceX quietly absorbed xAI, Elon's artificial intelligence company. Back in 2025, xAI had already acquired X, the platform formerly known as Twitter, in an all-stock deal. Then in early 2026, SpaceX turned around and acquired xAI itself, folding the entire thing, X included, into SpaceX's AI division. So when you bought SpaceX stock this week, you weren't just buying rockets and Starlink satellites. You were buying a slice of X, the social media platform, and Grok, the AI chatbot, all bundled into one company. And analysts are saying this matters way beyond just SpaceX. Some are calling this IPO a signal flare for the entire AI sector. There's this idea floating around in finance circles right now that if SpaceX's debut goes well, it opens the floodgates for a wave of other massive AI-adjacent companies to follow with their own public offerings. One analyst from a major firm basically said this is a reflection of just how hungry investors are right now for anything tied to AI and space and the future. So this isn't an isolated event. This is being treated as the starting gun for what could be a whole new era of mega IPOs. Okay, so that's the hype. That's the headline version. $2 trillion, record-breaking, historic, the future is here. Now let's talk about the part that doesn't get nearly as much airtime. First thing, SpaceX has a long, well-documented history of losing money. For most of its existence as a private company, this was not some lean, efficient profit machine quietly printing cash behind the scenes. It was a company burning through enormous amounts of capital, betting everything on long-term projects like Starship and Starlink that took years, sometimes over a decade, to even approach profitability. Now, recent reporting does suggest the company has reached positive cash flow, and Musk himself has said SpaceX doesn't urgently need this money, which honestly raises its own question. If you don't desperately need the cash, why go public now at this exact moment with this much fanfare? We'll come back to that. Second thing, and this is the one that I think deserves way more attention than it's getting: ownership concentration. When a company goes public, the story we usually tell ourselves is that ownership gets spread out, democratized, that now everyday people own a piece of the pie alongside the founders. But look at who actually controls the largest blocks of shares here: Antonio Gracias, who's the CEO of Valor Equity Partners and sits on SpaceX's board, owned over 500 million Class A shares heading into this IPO. That's about 7.3% of the entire company. And here's where it gets murky. SpaceX's XAI subsidiary has leased equipment from Valor, Gracias's own firm, in deals worth over $20 billion total. Between January 2025 and February of this year, XAI paid back $1.7 billion to Valor. Meanwhile, going the other direction, Valor paid SpaceX's X platform $1 million in 2024 and another $1 million in 2025. So you've got a board member whose private equity firm is doing multi-billion-dollar equipment leasing deals with a subsidiary of the company he sits on the board of, while also owning a massive personal stake in that same company. That is the kind of interconnected, related-party transaction web that should make any investor pause and ask some serious questions. And Gwynne Shotwell, SpaceX's president and operating chief, the person who's basically run day-to-day operations for years and arguably deserves enormous credit for SpaceX's actual operational success, is only the fifth largest holder of Class A shares. Think about that for a second. The person who has run this company on the ground for nearly 2 decades isn't even in the top 3 of share ownership. So who really controls the direction of this company going forward? That's not a small question when you're talking about a $2 trillion entity. Third thing, the X and Grok revenue numbers, while they sound impressive in isolation, need context. Subscription revenue between X and Grok increased by $365 million in 2025 and another $177 million in the first quarter of this year. Those are real numbers, and growth is growth. But compare that to a $75 billion raise and a $2 trillion valuation. The math here isn't really about current revenue. It's about a bet on future potential, on the idea that X's new Ads Manager rollout is going to dramatically increase advertising revenue per user, that Grok is going to become a dominant AI platform, that Starship is going to unlock an entirely new economy in space. Every single one of those is a bet on the future, not a reflection of current fundamentals. And when valuations get this disconnected from current earnings, history has a pattern, and it's not always a flattering one. Which brings me to the fourth thing, and honestly, this might be the most important one. There's research out there, and it's been repeated across multiple market cycles, that companies which debut with sky-high IPO valuations tend to underperform over time, with many losing roughly half their value within just a few years of going public. Now, I want to be careful here, because SpaceX is not a normal company. It has actual hardware, actual infrastructure, actual operational dominance in commercial launches, handling more than half of all orbital launches on the entire planet. Starlink has millions of subscribers generating real recurring revenue. This isn't some pre-revenue startup writing pure narrative. But even with all of that real substance behind it, a $2 trillion valuation built on the day one excitement of retail investors flooding in is a very different thing than a $2 trillion valuation that holds steady a year from now or 5 years from now, once the initial euphoria fades and people start asking harder questions about growth rates and margins and whether the AI narrative actually translates into the kind of revenue that justifies this price. And there's also a bigger picture question worth sitting with. CNBC pointed out that while this IPO probably isn't going to single-handedly break the broader bull market, there's growing unease among investors about what comes after. When you get this kind of mega IPO, this kind of massive capital event happening in a short window, it can sometimes act like a turning point, a moment where all the easy enthusiasm gets absorbed by one giant event, and then people start looking around and wondering what's next and whether the broader market has gotten ahead of itself. Equity and bond flows have remained positive heading into this, according to data from major banks, but positive flows during a euphoric moment don't necessarily predict what happens after the euphoria settles. So let's zoom back out. What actually happened here? A private company that operated for over 20 years without public scrutiny, that had a documented history of losses, that's deeply intertwined with a network of related companies and board members with overlapping financial interests, just executed the largest IPO in history in record time and immediately doubled past its already enormous starting valuation, fueled in massive part by retail investors caught up in the excitement of owning a piece of something that feels like the future. None of that means this is a disaster waiting to happen. SpaceX is, by almost any measure, one of the most genuinely impressive engineering and operational companies on Earth. The launch dominance is real. The Starlink subscriber base is real. The technological lead in reusable rockets is real. But real achievements and a justified valuation are two different things, and the gap between them is exactly where the risk lives. The hard truth behind the hype isn't that SpaceX is a fraud or that the technology isn't impressive. The hard truth is that an enormous amount of money just flowed into this company based on excitement and narrative and fear of missing out, layered on top of a corporate structure with some genuinely complicated related party relationships that most of the people buying shares this week probably never even read about in the S1. If you're someone who bought in this week because you believe in the long-term mission, in Starship, in Starlink, in the idea of humanity becoming a multi-planetary species, that's a values-based investment, and there's nothing wrong with that. But if you bought in because you saw the number $2 trillion and the words biggest IPO in history and felt that pull of, I need to be part of this, I'd just encourage you to go back and actually read about who holds the power here, what the revenue actually looks like relative to the price you're paying, and what history tells us about companies that debut at valuations this disconnected from their current financial reality. That's the conversation nobody's having in the celebratory headlines, and that's exactly why we're having it here. If this kind of breakdown is useful to you, hit that subscribe button, because we're going to be tracking what happens to SPCX in the weeks and months ahead. And trust me, this story is far from over. I'm Nova, this has been Pulse AI, and I'll see you in the next one.